Hey everybody, how you doing? Tom Willard, Tom Willard Trading. Video update, July 8, 2017. Hope you had a good holiday if you celebrated. Let's get to work here right away. Got some great information for you here. It's been a while since I posted, so I'm looking forward to giving you guys a little extra here to digest and to learn from. Now, this stuff is going to apply. It's based off of the charts. So these technical patterns, even though they're very valid right now, July of 2017, these will be valid, for years to come. But I'm going to address obviously the current market because that's what you guys are most concerned with. If you're a trader right now, got some really good information for you here. We'll talk about strength. We'll talk about small stops, patterns to look for nice small stops. A lot of people say low risk, and I'll talk about risk versus stops and reward to risk ratios in this video. And give you some top ideas to look to play here in the next couple weeks as things come up. One just thing you need to realize if you don't is earnings season. Okay, earnings season starting here pretty soon, and it's going to be coming hard. Be aware, anything you hold overnight, I strongly suggest you put down on your calendar when they report, because stocks can jump quite a bit off a report, and then you can make prudent decisions based on your trading plan, whether you want to get out prior to the report or stay in, or maybe reduce your share size and exposure. Okay, totally up to you, up to your plan. I always know when my companies report, and I make a game time decision typically the day before if I don't get out by my technical methods prior. The day before, I usually plan on either getting out or taking some shares off the table. And in some more rare cases, I will hold everything and go right into earnings with it, depending on what I'm seeing in the charts. So let's get rolling. First off, let's talk about the general market. QQQ SPYs, like I always do. QQQ, here's the tracking ETF for the NASDAQ. You'll see been a nice uptrend here on the weekly chart. Notice the volume here has been pretty high. We've come down a little bit off these highs, 144 down to about 136, and we're kicking at 137 and change here as of close on Friday, which was yesterday, July 7th. Notice here the support at 136 it found. In fact, what you've got here is technically on the daily chart a head and shoulders possibility. It doesn't mean it's going to happen. Okay, there's the head. Here's the left shoulder, the right head, or the right head, the center and one and only head, and then the other right shoulder here. Support here at 136. If we can break this 136, 135, 75-ish and change with authority, I think we go down. We have a good shot at coming down here to 130, which is the next major support area below. Okay, so do what you will. I own some puts actually in the Qs that actually got in on this gap up here at 142. So I'm very profitable on these right now, or fairly profitable, but looking for continued move. If it breaks, I've got some insurance to the downside for my long positions, because I do have a lot of long positions on the in the general markets too, and we'll talk about a few of them here. Okay, so watch that. Obviously, if it can hold this 136 line in the sand, start moving back up, then I think we're going to go back up to these areas here, at least 142, and we can continue on. Although this volume here concerns me for the longs perspective and how long we've been here. Geopolitical tensions, the whole North Korea thing going on. You never know what can happen, and there could be some dynamic moves. So be aware and be with the market each day that you can. On the SPYs, you got a little bit more strength, but it's sloppier. Look at this. Look at the chart on a daily here. Lots of just gobbledygook, ups and downs and reds and greens and ups and tails and just all over the map. So not clean by any means, but you can see it's kind of short, building up a rounded top here as it drifts down here to support here. It's got support around 239, 240. Next support here is going to be more down here at 235, 236. A lot of just chop and garbage here. But either way, it's holding up here better than the NASDAQ at this point, but not much. And the sloppiness, kind of makes it hard to give you a nice tight stop target situation. So you're going to be mucking around here. I don't trade the SPYs really much unless it's an intraday basis only. All right, so let's talk about strength. If you're following the markets, you probably know this already, but I'll just talk about some. This is actually an idea I'm looking to buy. The XLF on the weekly. You'll see here you got a nice little cut that's formed off this move up, this breakout here over $20 a share. Moved up here nicely. Another breakout, revisited the lows, found support at 23. There's a hard line of support at 23. You can look for a breakout above these highs. You'll see here on the daily chart, you've got actually a flag forming at 25.20. So I would prefer a few more days here and then a significantly strong volume breakout over 25.20. That's your entry, and your stop would be the low of the flag or project it down, maybe the support area here around 24.60, depending on how it all shapes up. But financials are strong. Not all are the same though, because take a look at Morgan Stanley. Morgan Stanley on the weekly chart. Let's just compare weeklies because there's a little more time there. You can see a little more time, but you see we're back up here near the highs. Okay, look at JPM. JPM also back up near the highs and slightly above, so there's a little bit more strength, relative strength in JPM to Morgan Stanley. Now look at Goldman Sachs. Not even near the highs. Goldman Sachs is a laggard. If for some reason the financials fall apart and hell breaks loose, Goldman Sachs would be the one to short, especially off an attempt to move higher here as it comes in and sucks in more longs off this pop-up. You can look to get short and ride it down to the 170 mark due to the void here. Again, if and only if the financials roll over. I don't think they will. But you can see the relative strength. And obviously the one to be in if you're playing these three. If these three are in your bailiwick of things to play, JPM is the one to play. The only problem with it, there's no entry. It's extended up. You got to wait, right? But with Goldman Sachs, and that again, if the financials rock and roll, Goldman Sachs will probably follow suit. The laggards will be fine. They'll just get dragged along in the trail of JPM and Morgan Stanley here. Morgan Stanley, you don't have a setup either, okay? But finances are strong. Take a look at those. Some of the banks are strong. The other banks, like Capital One Financial, you see this is relatively weak. I'd be looking to short this one again if the financials fell apart. COF is definitely one of the weaker ones as well. If you look at Citibank, that one's strong and on new highs. Okay, let's take a look at a few others. U.S. Bank, a little bit more weaker. Wells Fargo, a little more weaker. Okay, let's see. Bank of America, a little more weaker, but not too bad. Pretty strong. Strong in comparison to some of the others. Okay, so that's a walk through the financial sector. It's pretty strong. Housing, I've been talking about. PHM, I was a buyer of. Own this thing. Very nice move up here. It broke out again. You notice this sloppy base here on the daily. It broke out above new highs here on the weekly. You can own these if you don't already. I own this one. I own PHM. I own DHI. DHI also had a very fuerte breakout here over 35 on Friday. Nice cup, handle, breakout above. I think these are going higher. Toll Brothers, a leader. You can see this one's actually stronger than the two I own. I don't own this one. Toll, DHI, and PHM are weaker than this one. This one's strong. Didn't really give me an entry, okay, but I'm hoping for the updraft to ride those other ones, and I think they're solid stocks fundamentally. Toll, KBH is another one. You can see the strength here. Look at this one. It is cruising, okay. LGIH had a really nice pop here on volume. Okay, but kind of a hanging man, so I don't know. It definitely is strong though. So that's the housing sector. That's another sector that's strong. Finally, the other strong sector I want to talk about is defense. UTX here, I think, is fixing for a breakout. Watch it for over 123. It's been kind of sloppily trading along here, basing out here between 118 and 123 since about, oh, good God, when is that? Yeah, mid-May. Okay, so keep an eye on UTX. I also like Raytheon, which is actually kind of leading, is actually breaking out as we speak. On Friday it broke out, as well as level 3 tech. You got this one topping tail here, but it's trying to break out above. I like this one above here. Honeywell's one you can watch as well, also very strong. All strong stocks, got to have entries. A lot of these are extended. You're kind of chasing at this point, but watch them because in light of what the market's done, these sectors, finance, housing, defense, are holding up really well. Okay. So I would keep an eye on those. Now let's talk about reward risk and low risk trades. You know, a lot of people throw this around. This is one here, IGT. You'll notice it's just been getting crushed here. It's kind of pretty much round tripped here from this move up, okay, all the way back down to this 18. But it's finding there's a solid floor in here. Look at this, and the market started popping down here pretty solidly in the last couple weeks. And this one's held serve, other than this one little blip below this base here. But notice it held the tail. I'm interested in this one for a pop. It's in the gaming sector. The gaming stocks are strong in general. That's another sector. Las Vegas Sands, LVS, Wynn, MGM. In fact, I'll pull up MGM here in a second. But this one, although it's downtrending here, you've got the death cross on the moving averages on the weekly and the daily. This might be a low risk trade. I mean, you can get in at 1850 or 19, and just draw your stop in below these lows around 7. I think it's like 17, 18. Let's see, 17 and a quarter. Okay, so you've got solid, and you've got support here to the left too, right in this area down to about 16. So it depends on your risk tolerance. Okay, but reward-wise, you can look for at least a retracement back up to the moving averages 22, 23. But obviously those are going to go down as we move through time. So it depends on how much it languishes, how fast it can retrace to the upside. You're fighting the trend on this, but I think if gaming sector stays strong, this one may get sucked up, and it's showing some relative strength here on the daily chart and weekly chart in comparison to the general market. Another low risk one here is Nuance. Okay, this is a nice one to own. I sold it off, and I'm looking to buy this again in this area here. Look at its support. Okay, it's been going up, higher high, higher low. Okay, higher low, higher high. Maybe, well, we don't know if it's going to be a higher low. It could come down and take this out, but right now I like my chances. I like the support area here at 17. Okay, I think you get a hard floor here. Stop at around 16.20-ish, 16 maybe. Give it some room. So you're looking at $1 risk. Buy it in here if you want to keep it real tight. Hell, get in here at 17.25 to 17.50 and put your stop under 17. But there's a higher odds of you getting stopped out. It's a pretty tight stop. Okay, you could get whipped out of this thing. So it depends on your game. But I think this is in the rising moving average here on the weekly chart. You've got the crossover. You've got a couple of higher highs, higher lows. It looks like it's trying to trend up. If the market can stay strong and does not collapse, in other words, that head and shoulders formation on the Qs doesn't come to fruition and fall apart, I think this is worth a trade to the upside. Watch Nuon. 3D is another one that's trying to turn around. You see the uptrend here on the weekly chart. The daily chart is starting to roll over, but very, very strong move up on volume. This is very indicative of there's typically follow through to the upside on something like this, but not always. Find a lot of examples where it doesn't fall apart, so you got to have stops. But notice how it's come in. It's settled in here. Volume or the bars are getting tighter. You'll notice if you look to the left on the weekly chart, it's right at support, right? So look to take a nibble here. If you get a setup, maybe a little green bar, maybe a tight little bar, buy the higher the bar, give you a stop below that. Depending on your risk tolerance, you want to give it, you basically, after this move of 14 to 24, it's pulled back to 17, right? That's about a $6 pullback. So you've got about a 50% to 60% retracement back to support and a rising moving average. This could be a nice low risk trade to the long side. But again, pull the ripcord, have a stop in. If you want to keep it tight, like I said, your entry here would be 18.25-ish, and your stop would be 17.75, 50 cents of risk. But listen to me now, okay? That doesn't mean you're going to get out at 50 cents if you get stopped out. What happens you buy this thing, say it breaks 18.25 or 18.20 Monday, and you're like, oh, hell, I like what Tom's talking about. I'm going to get in, and I'm only going to risk 50 cents on this thing. I'm going to put my stop at 17.75, right? So you're looking at 25, say 50 cents of risk if you get filled at 18.25. Say, all right, cool. I buy 1,000 shares. I'm risking $500. That's nothing. Then you go off to work, and then you put your stop in. It doesn't get hit. Then Tuesday you wake up, and the thing's at $16 a share. You just lost, $1,125 when you were only anticipating losing $17.50. So realize this, okay? Don't just put it. Maybe if you're worried and you can't watch something, or you don't want to hold it, you're worried about the overnight. And this is especially gets back to my comments about earnings season. That kind of crap happens all the time. So don't think you're getting away with 500. You're only going to lose $500 because you could wake up. Hell, something could happen with the leadership of the team. Someone could get fired. Someone could get killed. Someone could do something scandalous, and the thing could, in the middle of the day, halt for trading and move. So you just got to be aware of these things. But on the converse, and to be positive, it can happen in your favor too, right? You could wake up Tuesday and the thing could be at $23 a share. It could be a buyout. It could be like a Whole Foods Market type of situation. So just be aware, okay? Maybe use smaller shares, depends on your risk tolerance. You should have this in your plan. If you don't have a plan, turn my video off and stop watching my channel because you're screwing around, you're gambling. And your money you shouldn't be gambling with. Go to the casinos, play craps. That's the game I play. I love it. We can talk about that in separate videos. Last but not least, for a tight stop, low risk type trade, Intel here on the weekly. Look at this here. It's been kind of just kind of shimmying sideways between 34 and 38 here for a while. And you can see it's come right back down to the support area. So that doesn't mean it's going to hold, but you've got a nice move down. You've got a hold here in general. You've got a pretty tight stop, okay? Assuming it doesn't gap down on you. You got an entry there at about 35, say $34.50 a share. And you can put your stop at about 33. So you're risking $1.50. And looking for a general, market and technology stock move back up. Solid stock, great fundamentals, okay? And the chart here is showing it's at support. Now's the time to buy if you like this stock, okay? If you think and you think the market's going higher. But pull the ripcord. If it breaks below 33 and change, I think a revisit to the 30 area would not be too far-fetched. Okay, so not a low-risk trade. If you want to take a nibble, take a shot at here on Intel, it's not bad. Okay, now a few long ideas. FireEye, which I also call fisheye. Look at his base. Look at his weekly chart. Okay, now granted, it's coming off a massive downtrend, but you got the bullish crossover of the moving averages. You got volume here pretty low in this base. You got oscillating between 14.5 and 16 bucks a share. I think a break above 16.25 or whatever the hell this top is here, 16.25. How about that? Breakout about that is buyable with a stop below this. Okay. Now, using the same Intel concept, I own this stock. I've been buying it here in this low range. When it came down here, I bought some and I bought some more. Okay. So I own this thing, and my stop is, guess what? Just below these lows here, right? Just below 14.5. Okay. So I've got a real tight stop. Now that doesn't mean Monday we could wake up and it'll be at 12, and I'll take a shellacking on the shares I own. Okay. But I like this base. I like the way it looks. I'm looking for a breakout above to add to my, and I'll add to the position again if it breaks above 16.25. Now, if it gaps up to 18, well, then I'm just going to ride what I got. But I think fisheye is definitely worth watching on the long side above that high, okay? Or at the support areas like I'm getting in here. Oracle. Oracle was in the news, had a great pop up here. Notice the volume on the weekly chart is pulling back here. Nice little pullback, controlled. You got to changing color, a green candle after a red one. You could look to buy the highs with a stop here below the lows. Rising moving average is catching up to it. It's pulled back, technically about 40% of this initial move off this 44 to 52 mark. I think it's solid. If, again, assuming technology holds up, the head and shoulders doesn't come to fruition, the thing wants to go higher, the market wants to go higher, Oracle I think will be a leader if that's the case. So I think this is worth a shot here on Oracle. Nibble, nibble, nibble to your plan. Let's take a look at a short idea I have here. Good old Yelp. Look at this weekly chart. Up, down, okay, double top, came down, hit support, then broke that support area big time. And now it's retraced here weekly to the declining moving average on the weekly chart. Holy crap, I love this thing. Below these lows, you can short it, okay, with a stop above these highs. So 31.5, 32 tops. I think on the stop side, you'll see that there'll be resistance in that area typically, technically speaking, okay. So on a pop up to 31, if you're feeling frisky, you could try to add your short or initiate a short in this thing up in that area, and look to ride it down to 20. Again, this is if the market falls apart, this one will be one of the leaders to the downside. Methinks, okay. I think that's worth a look. The gap, weekly chart, sideways. You got strong support here at 22 so far. If it breaks that support, I'm looking to get short, riding it down to this area down here. You got a fairly tight stop sizing up here. You got what, 23.50 on the top side, 22 and 21 and change on the bottom side. So you're looking at what, maybe $2 most stop wise. So I'm going to take a shot at this. Watch this as a short idea below these lows. GPS. And this is kind of a little bit off, but Restoration Hardware. This looks pretty climactic to me. Now, and granted, the weekly chart or the monthly chart is being down, but you can see this move up and this big red bar on this pop up here on volume or higher volume. Okay, I think this might, if the retailers fall apart more, I think this one has downside. I think this may be the drain out to the top, to the shorts, getting drained out here, and the weak hands have been shook out. And I think this would go lower. But this is a much more, to me, unorthodox trade. You got to know what you're doing. It's much more advanced, meaning it's got a higher fail rate. Here's the monthly chart. Let me just bring it in so you can take a peek at it. You'll see here, look, the move down is actually about a 50% retracement to resistance at 70 off a failed breakout, what I call a moron breakout, okay, on the come down here. I think this thing's worth a shot to the short side if you feel so inclined, okay? All right, much longer video this time around. I wanted to give out a little bit more information, a lot more ideas for folks, especially with earnings season coming up. It's my favorite time to trade. With that, I will leave you to it. So you guys have a great trading week, trading month, and I'll see you in the next video I put out there. If you got any questions, hit me up. Just comment on the video. Feel free to like and share. And, of course, email me if you want, as many as you like to do, tom@tomwillardtrading.com with your questions. Talk to you guys later. Have a great weekend.